What's up, guys? I'm Nobody Special. And tomorrow in the States, we're going to sit down for Thanksgiving dinner, and it's going to be the most expensive Thanksgiving dinner in history because, as we all know, inflation has really hit grocery prices recently. But the story that is not getting nearly enough attention is how expensive next year's food is about to get because fertilizer prices are going straight up with no sign of slowing. This means that the price hikes we've seen in food so far this year are nothing compared to what's coming. Are you ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm Nobody Special. And here in the States, everybody's well aware of how much food prices have gone up recently. We've all seen sticker shock on the turkey that we're buying for our Thanksgiving feast tomorrow. We've seen the price of bread, milk, eggs, everything is going up, right? The inflation story is nothing new, but the real story that we all need to watch is what's going on in the fertilizer industry because that is next year's food getting way more expensive already. And as you're about to see, the price of fertilizer has gone vertical and it is not slowing down. And this is a very bad sign of things to come for food prices. Now, before we get into the numbers, guys, I have to ask, could you please like this video, subscribe to my channel, and don't forget that notification bell. It really helps me out and it helps me to keep this channel growing. And now it is that time to shrink my big fat melon head and get into this story. And here we have on Progressive Farmer, DTN retail fertilizer trend, nitrogen fertilizer leads the way higher. And before we get into the article, just take a look at this chart. Now, this is the price of UAN 32. UAN stands for urea ammonium nitrate, which is a common fertilizer compound. What we have here, the green line is 2020's price trend. The purple line is 2019's price trend. And the red line is this year's price trend. And oh boy, look at this line. It has gone vertical and it is still going vertical. This is the week ended 11/19. So this most recent data point is only a few days old. This is a parabolic move straight up and it is still going up. That's the important thing to remember here, folks. This move is not done yet. We don't know how high it's going to go. Now, we have talked about fertilizer prices a lot recently, but I'm going to get into this article a little bit. Retail fertilizer prices continue to skyrocket higher, according to locations tracked by DTN for the third week of November 2021. As has been the case for months now, all 8 of the major fertilizers were higher. All 8. 7 of the 8 fertilizers recorded a considerable move higher compared to last month. Keep in mind, this is month-over-month numbers, all right? We're not talking about a 6% year-over-year CPI read. These are month-over-month inflation numbers. DTN designates a significant move as anything 5% or more in a month. Leading the way higher was UAN 32, again, that's urea ammonium nitrate, which was up a whopping 32% from a month prior. Keep in mind, the technical definition of hyperinflation is 50% month-over-month. Well, what we're seeing here is fertilizer is almost into that territory, aren't we? The liquid nitrogen fertilizer's average price was at $651 a ton, which continues to be an all-time high in the DTN data set. That was just one data point. Maybe that's the only one? Anhydrous ammonia was 30% more expensive compared to last month, with the average price at $1,220 a ton. This is also an all-time high. UAN 28 was 27% higher, looking back at a month with the average price of $571 a ton. Also an all-time high. Urea was 17% more expensive compared to last month, with an average price of $859 a ton. Again, an all-time high with DTN data. 1034.0 was 12% more expensive, looking back to last month with an average price of $739 a ton. A couple of fertilizers were only single digits higher. Potash was 8% higher compared to last month and had an average price of $769 a ton, while MAP was 6% from last month with an average price of $911 a ton. One fertilizer, DAP, was just a slight price increase. The phosphorus fertilizer had an average price of $825 per ton. Now, it is not just fertilizer prices that are going up, because I saw this article talking about fertilizer and herbicide, and this is on AgWeb. Will fertilizer and herbicide prices fall before spring, why experts say it's highly unlikely. Looking here, the supply chain constraints are continuing to plague agriculture, and as farmers work to make input decisions for the 2022 season, economists expect high input prices to persist through spring. One major reason for the severe supply chain constraints is China, as nearly 75% of the active ingredients and crop protection chemicals come from China. During a recent supply chain discussion hosted by Farm Journal, Rabo research analyst Sam Taylor said China is the main source of herbicide supply issues for 2022. Taylor, who researches the farm input sector in North America, not only looks at fertilizers and agrochemicals, but the broad farm economy as well. Between 70% and 75% of active ingredients do come from China, Taylor told AgriTalk host Chip Flory. If you drill down into the data, somewhere close to 90% of the intermediaries which go into production of active ingredients are actually sourced from China. So what we're looking at right now is American farmers have some major price exposure to farm inputs from China right now. And keep in mind, a lot of these chemical production facilities in China and in Europe are slowing production or shutting down outright because natural gas prices have gotten so expensive that these facilities can't operate profitably. And that means we are looking at possibly nitrogen fertilizer shortages in the spring. And this is a very big deal because higher nitrogen prices means higher food production costs. And if farmers are tempted to use less fertilizer, we could see reduced crop yields. Either way, this means food prices are going higher, and they are going a lot higher. And here we're seeing, this is on WTVB. This is referencing a Reuters article by Rod Nickel. Fertilizer shortage may lead to spring scramble on North America's farms. Global shortage of nitrogen fertilizer is driving prices to record levels, prompting North America's farmers to delay purchases and raising the risk of a spring scramble to apply the crop nutrient before planting season. Farmers apply nitrogen to boost yields of corn, canola, and wheat, and higher fertilizer costs could translate into higher meat and bread prices. World food prices hit a 10-year high, according to the United Nations Food Agency, led by increases in cereal crops like wheat and vegetable oils. Now, that is a 10-year high today, right now. This says nothing about future price increases. The Texas Arctic blast in February and Hurricane Ida in August disrupted U.S. fertilizer production. Then prices of natural gas, a key input in producing nitrogen, soared in Europe due to high demand and low supplies. Global urea prices this month topped $1,000 per ton for the first time, according to BMO Capital Markets. Russia and China have curbed exports. Now, that is a big thing. That is a sign of things to come. Russia and China curbing exports, because what you're seeing now is a lot of countries are starting to get isolationist and protectionist. As shortages and price hikes are developing, these countries are worried about their own food supply security, and so they're starting to hoard these much-needed chemicals. And this is going to drive prices up further. Now, it's not all doom and gloom. Here we're reading on in this article, in the United States, nitrogen fertilizer supplies are adequate for applications before winter, said Darren Kopach, CEO of U.S.-based Agriculture Retailers Association. Applying fertilizer before winter reduces farmers' spring workload. But with prices so high, some farmers are delaying purchases, risking a scramble for supplies during their busiest time of year, Kopach said. Global fertilizer sales were worth $53 billion in 2020, and prices are at least 80% higher so far this year, according to Argus Media. Normally, MKC, a Kansas farm cooperative, sells fertilizer to farmers for payment upfront with delivery months down the road, giving growers certainty about a key expense. But with prices soaring, MKC has scaled back its prepaid sales out of caution. They're worried about future price hikes and not being able to make delivery on those. You just don't know what the price is going to be. It has put a lot of retailers in a tough spot, said Troy Walker, MKC's director of retail fertilizer. Delaying fertilizer purchases until spring runs the risk of further supply chain congestions as farmers rush to apply fertilizer and plant seed during a tight window. There's going to be a lot of people who wait and see, Kopach said. But if everybody's scrambling in the spring to get enough, somebody's corn isn't going to get covered. So again, with these parabolic moves higher and shortages developing as countries curb exports, we could be in for a world of hurt in the spring as farmers are forced to make tough decisions on what they plant and how much fertilizer they use. And if fertilizer costs are too high, we may see the farmers cut back on its use, which will lead to lower crop yields, which will lead to much higher food prices. And combine this with rising input costs like labor, like energy, farmers are in for a world of hurt next year, and it's going to translate into much higher food prices. Now, for a couple of weeks now, I've been talking about how I think corn is an interesting way to invest this trade. Now, I have to preface by saying I'm not a financial advisor. This is not financial advice. Do your own research, your own DD, arrive at a decision that's right for you based on your unique situation. But I just throw these out there. I like the thought of using corn as a way to invest this trend because corn is a very fertilizer intensive crop. Right? Corn is not able to remove nitrogen from the air like, say, soybeans are. Corn gets all of its nitrogen from the soil, which means corn needs a lot more fertilizer than some of these other crops. So my theory is twofold. One, a lot of farmers may plant more soybeans or more wheat to save on fertilizer costs, thus reducing the total acreage planted in corn. And the other is that farmers who do plant corn may make the decision to apply less fertilizer, meaning those acres will yield fewer bushels per acre. Either way, that means higher corn prices next year. So what I did a few weeks ago is I bought call options. I bought January 2023 call options in this ETF that tracks the price of corn, ticker CORN. Again, not a financial advisor, not financial advice. But a few weeks ago on my live stream, I drew these lines showing the flag pattern that I was hoping corn would make a breakout from. At the time, it had just touched this line. And as you can see, we have definitely broken out of that channel and we continue to move higher. And with the situation going on in the fertilizer market right now, I think we are looking at significantly higher food prices in the spring and into the summer next year. And I think corn in particular will see significant price hikes. And that's why I went this route. Again, not financial advice, not a financial advisor. I just like to throw these ideas at you guys to get the gears turning in your head and thinking about ways that you could invest in some of these trends that you're seeing. Now, the call options that I bought are out to January of 2023. I wanted to give myself plenty of time, and that's for a number of reasons. Number one, I wanted to get through the spring planting season. I wanted to get through any potential weather disruptions in the summer, and I wanted to make sure I gave enough time for the harvest and to see the actual results of these higher fertilizer prices and what they mean for the actual supply of corn next year. And I figured January 2023 would give me enough time for that. So long story short, folks, I know we are all hurting right now from the increases in food prices that we're seeing at the grocery store. And unfortunately, the bad news is with everything going on in the fertilizer industry and the energy prices and the shortages of natural gas, it looks like this pain at the grocery store is only going to get a lot worse next year. And again, since I'm always looking at ways to invest these trends, I think corn is an interesting way to position yourself for this trend. Guys, I want to thank you for your time. Thank you for watching this video. Don't forget, give me a thumbs up, subscribe to my channel, and hit that notification bell. It really helps me out. I'd be forever in your debt. I want to wish you all a happy Thanksgiving. And until next time, live small and dream big.